Hi, and welcome back to another live event. Today, we're going to be talking about credit scores, or in particularly myth-busting credit scores, because there's a few things that's quite common when people come through and have a chat with us, and that is most people say, I haven't really got the best credit score in the world. And if I had a pound for every time I've heard that, I probably wouldn't be sat here making these videos, in all honesty. So it's not always the case. Yes, some people have got bad credit scores, but let's go through what it is that it actually means. The problem with credit scores is they create a huge amount of worry. Obviously, if you've got a really negative credit score, then you could end up either getting declined or ending up that somebody's turning around and saying to you, actually, yes, I'll do it, but there's a lot more money you've got to pay. But that's not always the case. So what we're going to do, we'll run through this now and explain exactly how all of this works. So, myth-busting credit scores, right? So what do we need to do? Understanding credit scores. What exactly is a credit score? So a credit score is effectively a series of numbers that's attached to you, your circumstances. And now every lender is slightly different of how they put this together. And that's a really important point to note. So a credit score is effectively a number or a score that's attached to a specific part of your profile. So let's just say you have a landline telephone number that you've given to a lender. One lender may say, right, we're going to give you 10 points for that. Another lender may say, well, don't really care if you got a landline number or not, we'll only give you 5. Another lender may say that actually he is between the ages of 30 and 40. So you're going to get a little bit higher score for that. There's so many different factors within a credit score and what makes up a credit score that it's really difficult to say there is a specific thing that's important or something very specific you can do. But there are some really general ways that you can improve your credit score. And having done this for 15 years or so, we've learned over that time of how to do it. Why are they important? Very simply, if you've got a decent credit score, what the lender deems to be a decent credit score, you're far more likely to get accepted for deals with lower interest rates. Lower interest rates, lower fees, and dare I say, lower deposits. A lot of people I speak to say, I'll never get a mortgage, it'll never happen. And sometimes they're right, mortgages aren't for everybody. But often it'll be, right, well, maybe you can't get a 5% deposit, but maybe we can get you a 10. And actually, sometimes there's ways around that in terms of like gifted deposits or gifted equities and things. So not everything is lost depending on your credit score. How credit scores are calculated. I've touched on it briefly. So they take every little piece of information that you've got within your credit file, and obviously whatever pieces of information you give on a application. And let's say, for example, debt to income ratios, or let's talk credit utilization. Credit utilization is if you have, let's say, one credit card with a £2,000 limit on it, and you've got another credit card with £1,500 limit on it, and you are very close to both of those limits, your credit score will be reduced. And why is it reduced? Simply because that is the lender basically saying, right, well, why are they right up to their limits? Is there an issue? Does that cause problems? Whereas if you don't use any of the credit at all, it can also be problematic because they don't know that you're even aware of how to use credit. Yes, they've got it, but they don't use it. What happens if they did start using it and didn't start paying it? So really where you need to be is if you look at your credit limits on your credit cards as an example, you probably need to be, or your balance needs to be anywhere between 30 and 40% of that, or no more than between 30 and 40% of that. And the absolute ideal way to use a credit card, of course, is to set a full direct debit, so to clear it at the end of every month. So use it for shopping or petrol or whatever it is, and that will pay it off at the end of the month, and that will slowly but surely increase your credit score. What you don't want to do is to not pay it and end up with things like defaults or county court judgments and those sorts of things. Now, there's a couple of different credit agencies in the UK, and this does sometimes make life a little bit interesting because they don't always hold the same information. So you've got Experian, Equifax, and TransUnion. And there's a new one, which is called Crediva, if that's how you pronounce it. Not allowed to use the logos, so they're not on the screen, but that's the names of them. So Experian and Equifax have probably been around the longest. And then TransUnion, which used to be called Call Credit, is the other one. So generally lenders will use one or two of these when making a decision. Now, generally all lenders have got access to all agencies, but there are occasions where they just don't use them all. So some lenders may choose to use Experian and TransUnion, for example, or Equifax and TransUnion. The reason I mention this is because this can sometimes be very useful. And it's useful simply because if the information that they hold is different, one may be a little bit more better. Trying not to use the word I want to use before I get shot for it. But more in your favor then. Let's just say that when the information goes through their system to calculate a score, it'll definitely put you in a bit slightly better, or may put you in a slightly better position. And we come out of how you can work out who holds what in a minute. And there we are, right now. So we'll go through this at the end. There's a couple of ways to do this. You can either approach all 4 credit agencies. They've got statutory reports. They will provide you with all of this information completely free of charge because they're not allowed to charge you anymore. However, what they will not do on a statutory report is provide you with a score because they don't need to. And in all honesty, you probably don't need it either. Because like I alluded to at the beginning, each lender has a slightly different way of coming up with a score. So you can go to one high street bank, or any bank, doesn't have to be an high street, and come up with top marks and pass with flying colours. And you can go to a different bank next door and fail miserably. It's just how their credit systems work, how their algorithms are all set up. So we'll come on to how you do it in a second, but essentially there is one system that you can use that will download all 4 credit reports and put them in a nice little table so you can compare each one or with the information that's held on each one. And that's really important. That's really useful. The role of credit scoring. Again, I probably won't say what's going through my head, but essentially they are looking to lend their money to clients or you guys who they have got a very strong opinion that you're going to pay it back. And the important part of that is, of course, that you've done it before. So if you've got credit that you're currently paying and you've got loans and credit cards that you're currently paying, then that's a reasonably strong indication that you know how to use credit and you will actually start paying it back. And credit scores are important simply for that. The higher your score, then the better the deal, or the more likely you are to get accepted for a deal, and more likely that deal is going to be in your favor rather than the other way around. Now, that's not to say that credit scores or mortgages are not available to those that have got negative credit or negative things on their credit file. So, for example, if you had a county court judgment, that is going to give you some negatives on your score, and that is going to very much depend on age. Okay, or not your age, but the county court judgment. So, for example, if you just had it, so let's say yesterday you had a county court judgment and it's for £25,000 and you haven't paid it off yet, then you're probably going to lose a lot of points for that. Whereas if you had a mobile phone bill that somehow didn't get paid 5 years ago and it went to a county court judgment and it's for £93, it was paid off and it's got, it was 5 years ago, that's going to have a far less of an impact. Now, there are some high street lenders that if you've got a county court judgment at all, they just simply won't lend. But if you've got a £93 county court judgment from 5 years ago, which you've paid off, then some of them will just completely ignore it. The other thing to touch on is things like bankruptcies and repossessions. A lot of people think, well, actually, if I've ever been bankrupt or if I've ever been repossessed, I'll never get a mortgage again. And you won't immediately. That's true. But as soon as a couple of years have passed, and when I say a couple, 2, maybe 3, then you will slowly start to get lenders that will start to look at you again. And a great example of this is we've had one recently where they were repossessed and made bankrupt, and you had sort of limited companies that had gone under and owed sort of lots of money for various different people. But this was over 6 years ago. And the important thing to remember is your credit file, or the information that's on your credit file, generally only lasts or stays there for 6 years. And that's 6 years from the date that it's entered on there. So if you've got a county court judgment that was entered on there 5.5 years ago, then it's only 6 months and it'll come off. So because it was over 6 years ago, essentially the client was well, they were approved for a mortgage with a 5% deposit. So, and they came to us thinking this probably isn't going to happen. And it's important that you do ask these questions, because often it's really not as bad as you think. And if you speak to anybody that's slightly of the older generation, you'll hear the words black mark. Oh, that's it. You've got a black mark against you now, and that's just not true. Yes, you'll have some negative information against your name for a very short period of time, or a long period of time, depending on your opinion of 6 years, I suppose. But eventually it will drop off, and it becomes less relevant. How do you improve your credit score? Very simply, it is by making sure that you obviously pay everything on time. You make sure that your credit utilization, like we discussed earlier, credit limit versus what you actually the outstanding balance, and this is across all of your credit cards, and really that should be between 30 and 40% of your credit limits, and as long as you stay around there, you should generally be okay. But there's the other part of that puzzle that looks at something called debt to income ratios. So if you are earning £20,000 as an example, then really you should not be borrowing any more than maybe 3 or 4 times that. And if you are anywhere near 3 or 4 times that, you're going to start having problems in terms of what it's going to start bringing your credit score down. So just make sure you're borrowing within your means, and look at what you're earning overall, and maybe times that by 2, and you really shouldn't be taking a lot more than that if you're looking for a mortgage. Actions that can negatively impact your credit score, very simply, county court judgments, defaults, IVAs, bankruptcies, that type of stuff. IVAs are often sort of, gotta be careful what I say, because I know compliance will see this eventually. IVAs are definitely one of those things that are sort of sold as a thing that will make debts go away reasonably quickly. But in terms of a mortgage, they kind of linger around for a long time. So if you're in an IVA, they generally last for 5 years, and they generally hang around on your credit file for 6 years after it's ended. So you have it sort of lingering for about 9 years or so, and that is really crippling when it comes to mortgages. So before you do enter into an IVA, I'm not saying don't do it, but before you enter into an IVA, might be worth having a chat with a mortgage broker, and they can kind of let you know what the score is, with how that will affect your application. Common reasons for mortgage rejections related to credit scores. Now, every lender's got slightly different criteria, and what I mean by that is some lenders will base something purely on score. Others will completely ignore score entirely. So they will not have a mathematical equation that adds various different pieces of information together. It will simply look at the details which is on your credit report, such as how much borrowing you've got. Have you made all of your payments on time? Are you right up to your credit limits? And they will look at that, and they'll generally look at that manually. And should that all be clear, then you're far more likely to be accepted than you're not. Now, these particular lenders are useful really when you come to look at, let's say you do have some issues with credit, maybe you had a default a couple of years ago or whatever, so they will have limits built into their criteria to say, for example, you can have one default or two defaults or whatever, so your score is less relevant. It's more of the information that's on your credit file. That's the most important part of it. How to review and understand your credit report. That's probably the best time to really bring up this. Now, this is the system that we recommend when it comes to checking out your credit report. It's called Check My File. This will allow you to download all 4 credit reports all at the same time. And really what that allows us to do is to compare them sort of side by side, if you like. And because you can compare them side by side, you can kind of see what lender is more likely to accept, assuming that the information may be different. And they're not always different, but you'll be surprised how often they are. You might find there's a default on one and not the other. You might find there's a county court judgment on one and not the other. Mortgage brokers should be able to use this information to put you in a far better position in order to get accepted. Now, if you're interested in finding out more about that, there is a 14-day free trial available. Just visit the link on the screen. I'll also pop that on the description in the video. And give that a click. That'll take you through to my sort of Linktree page, and you can click on the link there that says free credit report. Go through that, and like I said, just follow the instruction. You can download it, and when you're ready, you can pop that across to a mortgage broker, and they can kind of let you know really what your or where you stand in terms of your credit report. Those that have seen these videos before will be very used to this by now. So when you're looking at sort of mortgage brokers or the service or any type of service really, rather than just mortgage brokers, then you've generally got 3 options, but you can only ever choose 2. So for example, you can choose a service that's good and cheap, but it probably won't be very fast. You can choose a service that's fast and good, but that's probably not very cheap. And you should always bear that in mind when you're taking out any type of service, as to what the important things are to you. What do you want, and what's particularly important, I suppose. And that's it for today, I think. Hopefully that was useful. If you've got any questions, as ever, just drop them in the chat, and I will do my best to answer them. For now, thank you very much.